Hello and welcome to this August 16th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are looking at the Dow Jones U.S. Apparel Retailers Index. Over the last few weeks we've really been concentrating a lot on the financial group. Also really paying close attention to the 10-year Treasury yield and also semiconductors. These are three groups, three charts that have really not supported the market's move to the upside, and it's been one of the reasons why we maintained a very cautious stance in the market. And it served us well as the market was hit pretty hard last week to the downside. One other index that I think is going to come into play, and it's going to be very important to watch this week, is going to be this Apparel Retailers Index. There are a ton of retailers that will be reporting earnings this week, including the likes of Target and Walmart, and some specific apparel retailers like Abercrombie and Fitch, and also Aeropostale. Just to mention a couple of them, there are some others as well. But because of all these earnings reports that are coming in, and the fact that this index is not looking particularly strong from a technical perspective, I think that the combination of weak technicals and some of these earnings reports could send this group to some new lows. And I'm talking about looking back over the course of the last year or so. If you take a look at this line here, right at about 335 is a major support level over the long term, and I'm talking about, again, going back a year into September of 2009. We have not moved down below this 335 area. So with this move to the downside, we were up at 450 back in April when the market topped. This has been a group that has really taken a big hit to the downside to the tune of probably, about 25% or so, just over the last few months since the market topped in April. Now, the reason that I think technically we could be in some trouble here is that, first, notice that the 50-week moving average and the 20-week moving average both intersect right at about the 368, 369 level. We broke below the 50, and when we came back up and retested the 50, notice we were also testing the 20-week as well. This 20-week is about to cross beneath the 50, and it's going to be the first time that we've seen this really, we haven't been below since back in May, June of 2009. So it's been a long time since we've seen on a weekly chart the retail apparel index showing a 20-week moving average below the 50-week moving average. So this is critical. Also, from a price perspective, in addition to losing the moving averages, going up and testing them from underneath and then breaking to new lows, check out this 335 price support, because if this goes to the downside, this was a straight move up, breaking above about 275, 280. I think to the downside, we could go as low as the 275, 280 area on this next move. So watch 335 very carefully. Also, check out on this weekly chart the bearish MACD crossover. This is telling us that even on the weekly chart, this isn't a short-term chart, this is a longer-term chart, but even here on the weekly chart, you can see that the MACD being below the center line is showing that the bears have a lot of control and a lot of momentum on their side at this point in time. So let's watch this 335 area closely in the upcoming week. If this group fails to produce solid earnings reports, or if the market reacts to them negatively, regardless of how well they report, if the reaction is poor and we see this index break down, it could spell trouble for the entire consumer discretionary group. So it's going to be a very interesting chart to watch as we head throughout the week. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.